So the difference is all the events that happened last year, I think they impacted people's taxes in some type of way, whether you were unemployed, whether you worked from home the entire year or worked in a different state, or even, we saw a lot of millennials and Gen Z taking advantage of the volatile stock market and investing in stocks. So, you'll see some impacts to your taxes there, as well as there was a lot of relief provided that people need to be aware of that can help their tax situation. So if you're unemployed, a lot of people don't realize that that is taxable income, and it was voluntary to take money out, of your unemployment. But a lot of people really needed that money, so they may not have taken money out. So they may see a little tax surprise. But one thing they need to be aware of is that there are a lot of income-based credits and deductions that you're able to get now that your income is lower. For instance, the earned income tax credit, that's a huge credit for a family of three. It could be up to $6,660. So that's a really big credit for people to be aware of. Also, there was a provision in the coronavirus relief package that just passed in December that allows people to use their 2019 income if it's going to help them qualify for more earned income tax credit. So that's one thing to think about. There's also the savers credit. That's a little known credit that you get just for investing in your retirement. And that's up to $1,000 if you're single, $2,000 married filing jointly. And that's also income based. The lower your income is, the more of that credit you get. So that's something to keep in mind for sure. So a lot of people move to different states, so they're wondering, where are they going to pay taxes? You may have to pay taxes in two states, but there's two things that the IRS really looks at when they make the decision, and it's related to time and where your personal possessions are. So the first one is if you were in another state for over 183 days, you may be required to pay taxes in two states. And then also where your, what they call your domicile. So your personal items are where your bank accounts, your registration, where all of that information is. They will look at that as well. And then also keep in mind, there are states that have reciprocal agreements. So if your state has a reciprocal agreement with the state where you worked, you would get a credit and you would not be required to pay taxes in two states. That's a big question as well. One thing to keep in mind, so prior to tax reform, prior to 2018, you were able to deduct unreimbursed employee expenses, but that went away. So really only if you're self-employed can you deduct home expenses like the home office deduction. So that's one thing to keep in mind, but there were a lot of self-employed people out there, in 2020. So if you're self-employed, you could deduct the home office deduction, which is a huge deduction for people because it's a portion of your rent, your mortgage interest, property taxes, utilities based on the percentage of space you use. One thing to keep in mind too, it can't be like your kitchen table where your kids eat and do homework. It has to be a dedicated space, not if you're an employee. And now that's on a federal level though. Some states will allow you to deduct unreimbursed employee expenses, but it's on a state by state basis. So teachers, they do get a teacher's educator deduction, and that's up to $250 for their supplies they buy. But under the latest coronavirus relief package passed in December, they also added PPE equipment. So that's something for them to keep in mind. They'll be able to add that to the supplies that they can deduct. If you need them for your classroom, you can deduct it. That's part of the supplies that you can deduct. So stimulus, another question we see is my stimulus taxable? One thing to keep in mind, the stimulus payments are not taxable. If you receive too much, you're not required to pay it back, but there also may be a situation where you received a partial payment or didn't receive payment for your dependent. You'll be able to claim that as a recovery rebate credit when you file your 2020 taxes if you're eligible. Yes, I would think about also, we talked about millennial investors, and Gen Z. They took advantage of the low stock prices in March and then may have made some huge gains. So just keep in mind, you may have some gains, but you can also offset any losses against your gain to lower what you owe. And then also, I would just say for people, um, I would just get started with your taxes now so you know your tax situation. Last tax season, about 75% of taxpayers received a tax refund, close to $3,000. So that's a lot of money. And I know IRS e-file opens on the 12th. So, and Turbo Tax has been open. And also, if you need help, we have our Turbo tax experts that can guide you through your taxes, or you can either fully hand over your taxes to them. I would just also remind people, don't forget about some of the other forms of relief through the relief packages, through the CARES package. There was also, for those 90% of taxpayers that now claim the standard deduction, they may be able to deduct up to $300 in charitable donations if it was a cash donation. So prior to that, if you claim standard deduction, you can't deduct your charitable donations, but with this provision, you can. Also, there were some provisions for self-employed. If you were sick, if you were taking care of a family member who was sick, or your child's daycare was closed and you couldn't work, there's a qualified sick and family leave credits that you may be able to take. And those are worth huge credits. We have a calculator on our self-employed coronavirus relief center that will help you figure out what those credits are. They could go to turbotax.com or our coronavirus tax center as well. So unemployment, I know we talked about unemployment, and a lot of people don't understand the tax implications. And I know in our survey, 71% of our respondents said they received, oh no, this is on the stimulus payment, sorry. On stimulus, a lot of people don't understand the tax implications of stimulus payments, and 71% of our respondents receive stimulus, but 34% don't understand the tax implications. So that's where TurboTax will be there for you. We have proactive guidance related to the impacts that happened last year to guide people through like unemployment, stimulus payments, some of those key events that happened last tax season. And then for unemployment, 20% of our respondents filed for unemployment, and then 29% experienced an income reduction. Bringing that up, and then also we have for investors, 22% of the respondents had investment transactions in 2020, and 55% of those respondents said that they had sales transactions.